The following is paid programming.
It's time to talk taxes.
New friends, new opportunities, new partners, EG Tax.
It's Ask the Tax Lady with Esther Gulius and EG Tax on News Radio 930 WBEN. To reach Esther now, call 803-0930, toll free at 1-800-616-9236, and cell calls are free at star 930. And now, live from the WBEN studios, it's Esther Gulius.
Hey, everybody, this is Esther Gulius, and I'm the tax lady, and we are going to talk about taxes. And, of course, just like every week, we give you the most up-to-date information on taxes and things that you can use in your practical, everyday life that'll help you to make money, save money, because we want to help you. And, of course, I'm joined in studio today with Christopher Fabian. Hey, Chris.
Hello, Esther.
And Tiffany Fabian.
Hey there, E.G.
And,
how you doing?
And on top of everything, we have a special guest. You know, that's what we try to do this time of year. And we're going to talk to people today. And, of course, any subject is on the table. If you want to talk about slavery, you want to talk about taxes, which is slavery, anything financial related, give us a call, 8030930, 8030930, star 930 on a cell phone. And we have our special guest this week who's going to tell us how to get out of paying taxes legally, Paul Caputo. Hey, Paul.
Good afternoon, Esther. Good afternoon, Tiffany. Good afternoon, Chris.
Hello.
All right. And so Paul is an attorney, and he is our offers and compromise specialist, which, and if you've heard on TV, people that say, you know, if you owe the IRS $10,000 or more, give us a call because we're going to help you to get to reduce this liability, possibly down to pennies on a dollar. That's what Paul does. And so if you're somebody who's had garnishments, you're getting love letters from the IRS, you're getting love letters from the state of New York, you can't pay, they're threatening to take your firstborn, this is your show. Or if you have a daughter, a kid, a niece, nephew, aunt, uncle that you know is been kvetching about what the heck to do about their tax liability, you tell them to give us a call, a listen here on WBEN, and they can talk to Paul Caputo, who is our offers and compromise specialist. He's an attorney and he knows the ins and the outs. And so, Paul, gee, thanks for joining us on a Saturday. He's all dressed up like an attorney too. We're all here in shorts. He's here in a tie. You look good for radio, Paul.
Thanks very much, Esther. Thank you. I appreciate that.
Hey, before we get into the meat and potatoes of what an offer and compromise is, what it takes to qualify, who qualifies, can you really get rid of your tax liability, we want to talk about our upcoming tax school, right?
Yep. It starts in October, beginning of October. It meets twice a week, either in the mornings or the evenings. There's also an online version. So as Esther always says, you could do school in your PJs. It's free of charge. You do, however, have to purchase the book and the workbook and the software, which I think is about $95. And it's a great opportunity to learn taxes from A to Z. I know I teach one of the classes, and Chris, Mr. Fabian, I don't know. I have to lure him in.
Class.
Yes, you're
right?
teaching a class, but I have to lure him into helping me teach a night class.
But we not only have basic, we have advanced enrolled agents classes, and if you go to our website, you can register online, right?
That's right.
So just go to egtax.com. And again, if you're somebody that is interested in maybe doing clerical work, we also are going to start putting our clerical people through some tax classes so they can talk intelligently.
I know. I talked to a girl the other day, a lady the other day, and she lives in Canada, and she is a U.S. citizen, and she has to file a U.S. return, and she's going to take our tax class online just so she can file her own return in Canada, because she used to work in Canada as a tax accountant, so she's very confident that she can do it.
There you
and
go.
so it's a great opportunity
That's right.
just
So
to
you
learn.
can be cross-border.
Yes.
Cross-border.
Yes.
Okay, let's talk to Paul here. So, Paul, when they say on the TV, if you owe the IRS
Pennies
money
on the dollar.
and you are getting these dunning notices, can you really eliminate a lot, if not all, of the liability?
The short answer, Esther, is yes. Both the IRS and the New York State Department of Taxation and Finance have programs that they call the offer and compromise programs. And the programs work the same. They're intended to provide people with a fresh start initiative with respect to their taxes. Most people who come to us have not only tax issues, but they have problems with the penalties and interest that just become overwhelming as far as their tax liability is concerned. And that's what becomes really crushing for them, and that's usually what motivates them to seek some assistance.
Right. So, what would be the first signal that you need to reach out? Because these bills don't go away by themselves. You, the taxpayer, have to do something that would cause the IRS to take a second look at your situation. Otherwise, they just keep sending you bills, right? Correct.
I think the earlier you start, the better. I think the first indication that an individual may have problems is when they have their taxes prepared and they have a tax liability due and they're unable to pay it.
Right.
I think that's the first indication that there may be some indications of a problem. Certainly when they start receiving correspondence from the IRS or from the state of New York, they really need to open the envelope up and read it.
Oh, now there's the key. Open the envelope up.
Yeah, because the truth is, if you don't file, the IRS and New York State will file for you, and it will be the most bare bones, stripped up version of what your liability, and so you'll pay more generally.
That's right. But the thing is, and that's what Paul was saying, I was kind of jumping on the bandwagon there, is opening the envelope because you know it's bad news in there. And sometimes you don't want to see the bad news, so you just throw the envelope out.
And oftentimes they will come to us with, I don't know how many envelopes, half a dozen. Sometimes I've seen as many as a dozen envelopes. They're totally unopened and they're very, very dated. And it's a real problem.
And really, it's that first letter that explains, here's the problem. We see this. We have this liability. We have this computation that doesn't agree with your original return. This is money that you owe us, and there's the explanation. Then the next letter really just says, here's the total you owed us from the last letter, and here's the interest. And then pretty soon they start saying you have 30 days, 60 days, 90 days to respond. And each one of those letters are basically taking away your rights.
Exactly. And that's when the panic begins to set in, when the correspondence starts setting dates by which the taxpayer has to respond. That's when I generally see the individuals, and the best thing I can do is to start them on a path for resolving these issues, and that's oftentimes the offer in compromise.
Because my office is close to where Paul's is, and he'll say to people, but if you just made the little bit, the smallest amount, the interest is just snowballing, and pretty soon you're engulfed in interest and penalty. Wouldn't you agree, Chris?
Oh, definitely. I know we had all three of us were in a room with a client this week, and the gentleman just didn't understand that. He thought we could call them and get rid of the interest and the penalty, and we said no. We can maybe get rid of the penalty, but the interest is going to stay there. But if you go on a payment plan, the interest and penalties are going to keep building up and building up and building up.
That's why. So if you can, that's why the offer in compromise is the way to go. If you are somebody that owes the IRS money, if you know somebody that's getting a seizure on a lien on your bank account, taking money out of your paycheck, this is someplace where you can get the best free advice. Paul Caputo is our offer and compromise specialist. We're going to take a short break. We'll be back on the other side with your calls. 8030930, 8030930, star 930 on a cell phone. We'll talk to you on the other side. That's what we are. We have sisters and brothers with us, and we are family. I'm Esther Gulias, the tax lady, and we want to help you with your taxes, and especially the October 15th deadline is starting to approach in the next couple months. That's where the if you had an extension, that's where you got to get that tax return in. And those of you that filed an extension thinking you were getting out from the penalties and interest because you filed an extension, that isn't necessarily true, is it? Right, guys?
No, no. If you owe money and you didn't pay 90% of your liability, that extension basically is null and void, and they can come back and hit you for a not filing penalty, which is 5% per month, up to 25%.
So if you didn't pay that liability when April the 18th rolled around this year, and you think you have till October the 15th, and you do have a liability and you haven't paid it, should they wait till October the 15th?
No.
When should they file?
Now.
Yesterday, right?
Yeah.
Because the penalties and interest are accruing.
Yep.
And they got to see Paul.
And then I wanted to say, before we get off the topic, we were talking about owing money, and I've gotten many clients. One that I just helped recently, who is a candidate for offer and compromises. What prompted her to get the ball rolling is they started garnishing New York and IRS her wages, and she doesn't make a plethora of money, and for them to dip in and take some of her wages is just horrible.
Well, and we have one that we just started the other day, and Paul, because you're doing the offer, and when we called the IRS to put a hold on it, all she has is SSD, Social Security Disability. She's a poor little girl, lives home with mom and dad. And, I called and I said, we're going to get the offer and compromise started because she really has no money. And he said, she's got Social Security Disability. And I said, I know, but that's no money. Well, we can take her Social Security Disability. And that's kind of the reality.
I've seen it.
Right?
Yeah.
Chris, did you have your hand up over there?
No.
No, you didn't. Okay, why don't we go to the phones? 8030930, 8030930, star 930 on your cell phone. And we got Paul from Orchard Park. Hey, Paul, how can we help you, sir?
Hi, I have a quick question for you.
Yeah.
I recently purchased a home in the town of Orchard Park. I moved from another municipality, from the town of Evans. And when I moved into my home, I received notifications from the town about New York State STAR program.
Okay.
And I didn't realize that the STAR program had changed so drastically. I was used to basically having the municipality, I guess for a lack of a better term, file for me and just kind of provide the state with information, and I would be given the deductions based on the assessed value of the home. And now it seems that I have to do everything on my own. So when I purchased this home, I had to provide New York with 2 years worth of income filings for both myself and my wife, and now I'm kind of not really understanding.
Did you,
here.
Paul, did you just go online and do it online? You can just do it right through New York State's website.
Yeah, I did. I filed, I put everything on the Department of Taxation and Finance, filed everything through there. I'm just unsure as to now, at the end of the year or when I file my taxes, in one lump sum, or do they on a monthly basis like I was used to prior?
No, what supposedly is going to happen, you'll get a rebate check in the mail once a year for the STAR savings. They're supposed to get rid of it off of your property taxes is what I was told and heard. So,
and I would recommend calling his town, wouldn't you?
The town won't help them.
But they'll direct them to where to call.
There is you can call.
You can call us and we'll do a three-way, right?
Yep, and I got a phone number if you want it right now. It's 518-457-2036.
Do it again, Chris.
518-457-2036.
Okay, Paul?
Sounds good. I have one quick follow-up question real quick.
Yeah.
Have you heard anything in terms of, I was speaking to a couple of other homeowners, and they had said that they heard rumors about New York State going 100% for property taxes based on your assessed value of your home. And I know some municipalities are only at 50%, 53%, 75%. Is there any truth to that with New York State completely going 100% on assessed values?
I heard some of my clients talking about that. Didn't you too, Chris? Paul,
but
did you hear
it'll
that?
all have to do with your millage rate too.
More and more of the tax collecting entities are going to 100% valuation.
Yeah, my clients mentioned that.
But then they adjust the millage rate. So it's just like Amherst went to 100% value, and their projection was that the taxes were going to go down. And I presume for the first year they may go down, but I think that they're going to get me in the end. So, but I think that's what they're going to do. But then they adjust the millage per thousand, so it all comes out in the wash. But you'll find that when they do the 100% of evaluation, then it's easier for them to raise the taxes too. So, okay, Mr. Paul?
Thank you so much.
Thank you, sir. Bye-bye. I'm Esther Gullius, the tax lady from EG Tax, 8030930, 8030930, star 930 in a cell phone. And if you're somebody that's got questions about the IRS owing them money, if you are getting notices and you can't pay them, this is your show. We have Paul Caputo. He is he's an attorney and he is an offer and compromise specialist. So, Paul, before we get to the other calls, does everybody qualify for an offer and compromise?
No, an offer and compromise is basically an agreement between the taxpayer and the IRS. And there's an existing tax liability. And what the agreement basically results in is the individual taxpayer paying less than the tax liability. But in order to qualify, in order to be eligible, you have to fulfill certain requirements that the IRS has. One major one is that if you have a residual amount of income after you pay your expenses for a month, and that amount that's remaining is fairly high, they are not going to allow you to just discount your taxes. Remember, the IRS is a tax collection agency. They collect money to run the government, and whether it be New York State or the federal government, and they are looking for money. So you have to fulfill their requirements.
You are no fun at all.
Well, I'm a very serious guy. I got a very serious job.
So, all right. So the bottom line is you're saying so after your expenses,
Yes.
which I'm assuming can't be like lavish dinners and going to Acapulco in the evening or anything.
No,
like
there
that.
are 13
this would be conservative expenses that they allow.
There
right?
are 13 categories of expenses that the IRS has on their offer and compromise form. And they don't include charitable contributions. They don't include tuition for private schools. But they are the ordinary expenses that you would normally expect. Housing, food, health care, life insurance, those kind of daily expenses that everybody pays every single month.
Right.
Those,
So let's say after you have reasonable expenses and you still have $1,000 left at the end of the month, would that negate someone from doing an offer?
No, not necessarily, because the other component that you have to look at besides income is you have to look at their assets. You have to look at the net equity value in the assets. And what the IRS does with the assets is they will discount the total value by 20%. And then they will subtract from that number, whatever that resulting number is, any debt that you have with respect to that asset. So
Like a mortgage.
So if you have a mortgage, you're paying on a car, they will subtract that amount. So whatever the resulting amount is, that net equity value, plus your residual income, in the example that you gave, $1,000, those are the two critical numbers that you would look at to try to determine whether a particular taxpayer is eligible for an offer and compromise program. The person isn't automatically excluded, but you have to do the financial analysis because the forms that you turn into the IRS, they do the exact same financial analysis that I do in the office to determine what the appropriate offer is. Because those numbers, the assets, the residual income, those determine what the amount of the offer is going to be.
I'm Esther Gullius, the tax lady from EG Tax, and we have Paul Caputo in studio with us. He will help you if you owe money. So if you owe money and you're trying to figure out if you are you would qualify for an offer and compromise, 8030930 is our phone number, 8030930 star 930 on a cell phone. Yes, Mr. Chris.
And I want to say to people listening, don't be afraid to call and ask questions because you're not the only one in that situation.
For sure.
There are a ton of people. Paul, I think you might be working on 10 cases right now, maybe.
I have about 35 cases that I'm working on.
So if you are afraid, don't be afraid. You're not alone. The best step to do is make that initial call to us to get you set up with Paul. And we're very reasonable in what we charge.
Oh my gosh, we're like
pennies on the dollar compared
to all the other firms. Before we go on, I'm going to take these calls. We've been waiting a while. Hey, Sue, how can we help you? Sue.
Yes.
Hi, how can we help you?
Well, my husband and I are snowbirds, and we had our taxes done down in Florida this year for the first time. We did the e-file, and we had found out for our state we owed over $400.
Okay.
Which is unusual for us. So we did the e-file, and they were supposed to take it out of our checking account. we waited and waited, and they never took it out. Well, we came back up here, and we went to our regular tax guy and said that they owed us $60.
Mm-hmm.
So now we got a letter we have to pay by August 22nd, the $400, which they never really did take out of our checking account, and our tax guy is on vacation.
Okay, so here's the deal. Did your tax guy file an amended return for you?
Yes.
Okay, so what's happened is the original return that was electronically filed, which was done incorrectly in Florida, okay, was amended by your accountant. Now the right hand doesn't know what the left hand has done, all right? I would suggest you got that
Yeah,
bill?
do a conference call with me.
Yeah, I would call, you can call Tiffany. She'll do a conference call with you. Tiffany's right here
It's in
in
New
our
York State.
office. Then she'll call the state of New York and say, excuse me, New York State, if you'd like, we'll fax you in the amended return. But this nice Sue from Florida doesn't owe anything. You guys owe her money. And this way, it'll stop any collection action they would have.
And you don't have to get in your car. You can do it at home.
Right.
When did the amended return get mailed?
I would say probably 2 weeks ago.
Yeah.
Yeah,
for sure.
Yeah,
Yeah,
it's
for
going to take them 90 days.
Right, but that's why let them know that the amended return was filed. Maybe you can fax it in so they can have it in their hot little hands. But they're going to consider if you don't call, they're going to pursue collection. So, okay. Let me give you our phone number, Sue, and you can call us on Monday. There's no charge. 632-7886.
632-7866.
No, 7886.
7886. All
Okay?
right.
Thank you, Sue, dear. Bye-bye. And that's what happens is that, and that's really like what's happening with offers and compromise. People are getting these horrible bills, and until somebody steps in with the right forms and says, wait, stop the presses. Wait, we got to change this. We want you to look at this. Then it just goes on. I'm Esther Golias, the tax lady from EG Tax. We're going to break for the news. We'll be back with Joe and Dave and your calls on the other side.
You're a rich girl and you're gone too far, 'cause you know it don't matter anyway. You can rely on the old man.
Yeah, that's what you think. You can't rely on the old man's money.
Oh, I was going to say Uncle Sam's money.
Oh, yeah, right. Uh-huh. Yeah, Uncle Sam's relying on your money. I'm Esther Golias, the tax lady from EG Tax, 8030930, 8030930, star 930 on your cell phone. Don't forget, if something happens in the middle of the night and you wake up and say to your wife, oh, honey, I've got a tax question, you can actually go to egtax.com and you can write your tax question and probably I'll answer it in the
Because
middle
her
of the
phone
night.
goes.
Yeah, and then I don't sleep much at night anyway. So, but EG Tax is available for you all the time. And today we're certainly blessed. We got Paul Caputo in the studio. He's our offers and compromise specialist. If you're getting garnished, threatening garnishment, owe the IRS, don't know how to pay, haven't filed in years because you're afraid to file, this is your place for free information. 8030930, star 930 on a cell phone. Let me go quickly to Dave, who's been waiting for a while. Hey, Dave, how can we help you, sir? Hello?
Hi, honey. How are you?
Good. What can we do for you, sir?
Sorry, I'm driving, and I got people who are whatever. I apologize. I said an expletive, and you guys didn't catch me. Thank God.
Thank God.
In any event, ma'am, I'll see other gentleman's question about that STAR program. They're no longer automatically deducting the STAR off of your property.
Right, Chris?
That's what supposedly is going to happen. I don't know if they're phasing it in over, like taking half off your taxes, giving you a check. But like those checks you're getting in the mail
If you have children, right?
Are supposed to be for the STAR program. So
But I'm one of those idiots who, unfortunately, have become a slave to my own desires. A lot of properties. So one of my properties has the STAR program because you could only take one star. Now, I have a multifaceted question. Does the STAR, will it vary based upon the value of the property, or is the STAR a set cost?
That I have no
I thought it was based upon the property value, right? Because it used to be a reduction against your property taxes, your school taxes, but that is not the case anymore, as I understand. But what I'd suggest you do, Dave, is go to the New York State website. Chris, what's the site you're on?
I am on. Hold on, I'm just right at the New York State's website. So I actually just Googled New York State STAR program.
Right.
And it's www.tax.ny.gov/PIT stuff. My
okay,
phone's
but you
not
know
that
what we're
big.
going to do, Dave? Next Saturday, we'll do all the research for everybody since this is kind of a hot topic. And next Saturday, we'll have all of the information. So tune in next Saturday, and we'll have all the scoop for you, okay?
I tune in religiously, Esther.
Thank you, Dave. We'll see you next Saturday then.
Thank you, guys.
Bye-bye. Thank you. All right, we're going to go to Joe in Tonawanda. Hi, Joe. How can we help you, sir?
Two questions. One, Social Security Administration has removed $200 for the last 3 months from my disability SSD, and then they finally stopped doing it, and I told them I don't want Medicare. I have exclusive coverage through the VA, 100%, pharmacy included. And they wouldn't listen for 3 months, so that's about $600 they took. Do I ever have a chance of getting that money back?
Do any of you guys know? I would tell you, I think I would call Social Security and tell them that they made an error withholding. What do you think, Paul?
That's what I would do. I would contact Social Security, tell them to refund the money to you.
Were they taking it because of his health insurance, did he say?
Yeah, but they didn't know he had VA.
I wonder if he should call Tim tomorrow at the office because he does health care. I wonder, what do you think, Chris?
I think you got to go right to Social Security.
I would go to Social Security. If you need help, Joe, call us, because not only do we have Paul in the office, but we have Tim and Karen who are healthcare navigators, and we will not charge you. We'll do everything we can to help you get your money back.
Yeah, I've been there 6 times, and each time they say, "Well, we'll fill this form out," and nothing gets done. All right, and then the next question: I had a death in the family, and then monies were transferred over, and about 2,000 of it they wouldn't release. They said you have to wait until next year, and I don't file because I'm under the amount that you don't have to file. So that extra $2,000 won't be released unless I file taxes.
Right. So there must have been withholding in something. Was it in a pension plan or something, Joe?
Plan.
Pardon me?
It was a 401k.
Okay.
Money of the person who was deceased.
Right. All right. So how much money was there, Joe?
About $8,700, something like that.
Okay. So you're not going to get a 1099-R form until the end of the tax year. So that's when you're going to go through the normal cycle of filing a tax return to get the refund back. That's the only way you're going to get it until that tax return is due. Until January the 15th, when they open up to do electronic filing, and April the 15th, that would be when they would issue the refund. So unfortunately, that's the process.
And Joe, who did you contact several times to try to get an answer about the Social Security and the health insurance?
He was at Social Security.
At Social Security?
Office right on in Niagara Falls there.
And did they say that they think that there's a means for them to resolve this?
No, they just said, we'll fill out this form and we'll get back to you. And their form said, okay, we will at this time stop taking away the money because you have written.
I think you should call, and if you want to do it through us, you can sit home on Monday. Tiff will do a 3-way, and we'll talk to somebody directly at Social Security. Okay?
Because they all use the excuse we're just agents of the Security Administration.
Right.
We can't make a decision for you, blah, blah, blah.
Right.
Make sure you have some popcorn because we'll be holding for a while.
So call us at 632-7886, okay?
Oh, okay, thank you.
Thank you, Joe. Bye-bye. It's frustrating when you're dealing with big agencies, you know. Okay, so back to Paul here. All right, so let's just say that I owe the IRS $40,000. We'll do a concrete example. I have an extra income of $1,000 a month. I don't have any assets. What kind of offer do I have to make?
There is no prescription on the amount of the offer. A lot of it depends on how much you have available. They do have a formula, though, for determining a minimum offer. If your assets are in fact zero, and your income is only $1,000, you have a choice of two different payment plans: a lump sum payment or a periodic payment. A lump sum payment you pay in 5 months or less. Periodic payment you pay in 6 months to 24 months. The payment plan you select is important because you will take your income, $1,000 in our example, and multiply it by either 12 months or 24 months to determine what your future available income is. That would be, in our case, if an individual chose a lump sum payment plan, 1,000 times 12 is $12,000. That would be the total amount of the individual's minimum offer.
Okay, so that would be the minimum offer.
Correct.
So I owed 40, but based upon this computation, the minimum I would do is 12. So they could call and say to you, no dice, we want more.
The IRS can do that. There's no guarantee that they'll accept your offer. Remember, they go through the same kind of financial analysis that we go through to determine what the correct offer in their mind should be.
Right.
Also remember that there are exceptional circumstances, hardship circumstances, individuals' medical condition, their age, are all factors that enter into an offer in compromise. When I do my offers in compromise, I also draft an affidavit that lays out the individual's kind of life story, and I try to humanize the client in the eyes of the IRS.
That's a good idea.
Which would be really important because so many times people that have these liabilities, there's a story.
There's always a story.
Yeah, I mean, and it's the story that really does. I mean, I can think of one of my clients one time who, this lovely couple, they were together in North Buffalo looking at houses on a Sunday. They had nothing to do. They saw this lovely house that they wanted, and so they decided that they would take they were about 40 at the time. Yeah. They would take $200,000 out of their pension plan and just buy the house for cash, because then they said they'd have no house payment. Maybe it was $150,000. I don't know, something like that. The bottom line is no taxes were held. There was penalties, so at tax time they owed like $30,000. And I almost had to sweep them off the floor. Interestingly enough, this couple diligently paid the IRS, not with an offer in compromise, but that would have been their story.
I like how you said humanizes it. Paul tries to put it in a way, and you do the affidavit so that you could do the background and you can fill it in and make it
and
more.
So obviously, if somebody has a history of medical problems, right? I mean, the likelihood of them having income in the future, if they have a serious medical problem, would filter into the determination.
The IRS wants to know what your future available income is, because when they have you do the calculations on these forms, they want to know what is the reasonable collection potential. It's a fancy word, it's a fancy phrase for determining what money is available to the IRS that they can grab.
How much blood can we get out of this stone?
Exactly.
Right.
Exactly.
All right. I'm Esther Golias, the tax lady from EG Tax. We have Paul Caputo in studio this afternoon. We're talking about what if you owe the IRS and how to get out from under. In our example, we had a $40,000 liability that would have an offer of about $12,000. That's a $28,000 savings, right?
Yep.
And we're gonna take a short break. On the other side, 8030930, 8030930, star 930 on a cell phone, and we're gonna talk about what documents you need to prove that you would qualify on the other side of the break. Talk to you then. Hey, I'm Esther Golias, the tax lady from EG Tax. We're talking about how to get out from under if you have a gigantic tax liability. And we have a wonderful guest in studio, Paul Caputo. He is our offer and compromise expert. He's an attorney, local attorney in town. And if you have tax problems and you want to get out from under, and it hasn't been one of those weird phone calls where they said we're coming to get your firstborn child or something,
which is not true.
This is where to get the information. By the way, so let's say, Paul, you're in the middle of a bankruptcy. You can actually put your liability into the bankruptcy, can't you?
You can do that. There are situations where a tax liability can be disposed of in bankruptcy. There are certain requirements in terms of time requirements. Not every tax liability can be disposed of. If you're in bankruptcy, you cannot file for an offer in compromise. The offer in compromise papers will be returned to you, and you'll have to wait until the open bankruptcy is finalized and discharged in bankruptcy court.
Okay. So now, what kind of things would I need to bring to you to find out if I would qualify?
The things that we require to get started, we need basically your monthly income, your monthly gross income, taxable and non-taxable. A pay stub certainly would help. Your tax returns for the past 3 years, those also are very helpful. Then we need to see what your assets are, the value of your assets. That includes bank accounts, cars, real property, and then you need your monthly expenses and your liabilities. Those 4 categories of items can get us started in putting together the paperwork for the Internal Revenue Service or the state of New York.
All right. So, like in our example that we were talking about, the lady or the man that would maybe offer $12,000 on a $40,000 debt, that you were saying that can be done in a lump sum or periodically.
Well,
right?
the lump sum payment that they describe, it's really a misnomer. It's 5 or fewer payments. The periodic payment is 6 months to 24 months, so you're looking at anywhere from 6 payments to 24 payments. The names are a little misleading, but that's the way they structure it. And when you submit your application, because it's really an application for the offer in compromise, you have to file with the IRS a $186 application fee, and you also have to make your initial payment. Under the different payment plans, you have different payment amounts. Under the so-called lump sum payment, the 5 months or fewer, 20% initial payment is required. If it's a periodic payment, then you have to do just the initial monthly payment. If you have an installment plan going, a lot of people they come to us with installment plans. When you make your application with the offer and compromise, you stop making your installment plan payment.
You mean like if you were on an installment
plan already.
And you're going backwards because of the penalties and
Correct.
interest, right?
Correct.
Okay, I'm Esther Gulius, the tax lady from EG Tax. We're here with Paul Caputo. If you owe money and they're talking about leaning, garnishing, et cetera, here's your phone call that you want to make, 8030930, star 930 on your cell phone. We're going to go to Liz in Hamburg. Hi, Liz. How can we help you?
Hi, Esther. I have a question about what kind of tax liability I will face personally. Back in 2008, Mom and I bought a house together for $107. And currently, I'm in the process of selling that house for $123. Mom has not occupied the house since her stroke in 2013. So I understand, and we own it as tenants in common. I realize that the Medicaid people will take Mom's share of whatever proceeds are left. What about my share?
Do you live there, Liz?
No.
Have you ever lived there?
No.
Okay. So,
are you selling it through a realtor?
Yes.
6%?
Oh, I'm sorry. No, I'm not.
No. Okay, so maybe about 4,000. So, and
all right,
did
so
you guys?
You're going to have expensive sale that's going to reduce the 123 down to more like
119.
119.
Any improvements to the property?
Yes, there was a $20,000 addition, plus other things. I'd say maybe $25,000 to $30,000.
So then, Liz, you're selling the house at a loss. There's no taxes when you sell a property, a capital asset at a loss. So you won't have a tax liability. You're going to have to report it on a Schedule D, your portion, but you won't pay any taxes.
Okay, thank you very much.
All right.
Okay.
Sorry to hear about Mom.
Yes, thank you very much.
All right, thank you. Bye-bye. And that's what people don't realize is that all those things, Chris, those questions you were asking are so important because it increases the cost basis.
Right.
And decreases the value.
Which helps pay less tax.
That's exactly right. Okay, so Paul, let's say somebody owes money. When should they consider giving somebody like EG Tax a call. Now, like a lot of the national firms I know want like $3,000 to get started.
I've seen fees ranging anywhere from $2,500 up to $6,000
to just get it started.
To do all the work, put the paperwork together, and submit the paperwork. EG Tax charges $400.
What a difference.
For New York State offer and compromise, and $400 for an IRS offer and compromise. And remember, there's a $186 application fee with the IRS. There's no application fee with the state of New York.
And that's what's so wonderful. I mean, that's really who we are, right?
Right. And doesn't New York State, though, have a minimum you have to owe before they would consider an offer?
That's correct. I don't know that number offhand, but
there's one thing. Paul knows everything.
I stumped him.
How
I
could
stumped
I
him.
not know that? Paul knows everything about everything. So can you put into the offer and compromise, let's say that you had a liability from 2015 and you haven't filed 16 or 17, can you not have filed a return?
The IRS requires that you file all legally required tax returns before you submit the offer and compromise. So we have a number of individuals that haven't completely filed everything, and we've gone ahead and filed their returns for them to bring them up to date.
So how long does it take for them to say yay or nay?
It can take anywhere up to 12 months. Usually they do things within 6 months, 9 months. Sometimes
now, are you
less
still
than
making
that.
payments? I mean, so
Well-
while you're sitting around waiting, you're kind of sending them the money that you promised that you would send them, even though they haven't said yes?
That's correct. And also the penalties and interest continue accruing until the offer is accepted.
Okay, so on my $40,000 liability, it might go to $45,000 or $50,000 before they say yes. But if they accept the $12,000, it's done.
Then you're
But
done.
it can't just be that easy to say it's done. Is there any other caveats? Anything else that a taxpayer needs to know?
Well, you have to if you've had liens on your property with respect to your tax liability, those liens generally will stay in place until the offer is accepted and until everything has been paid. And one of the things I always spend time with the clients is talking and distinguishing between a lien and a levy. A lien is just a notice, a public notice to creditors that there's taxes owed. Those documents are filed with the local county clerk. A levy is the actual taking or the seizure of the property. The levies, if it's a pre-existing levy prior to the filing of the offer and compromise, those will generally stay in place, although they won't be acted on because most collection
activities... So the levy is still there, but they're not taking the money.
Right. The collection activities stop when there is a offer and compromise filed.
Okay.
If it's a post-filing levy, those will usually be released.
All right, so let's say you make the offer and compromise, you're diligently making the payments, and then next year you go back in the hole. In 2017, you decide to take $40,000 out of your 401k plan, and you go back in the hole. Is that something that I should be concerned about?
Well, you certainly should be concerned about it, but there is no limit on the number of offers and compromise you file with the tax agencies.
What,
but if you don't stay current with your taxes.
Well, you have a 5-year period where you have to file and file in a timely. You have to file and you have to file in a timely manner. You have a 5-year period after the acceptance of the offer and compromise where you got to obey the rules.
This is somebody that just is getting collected right now. He's calling me.
It's not my phone.
All right. So if in 2017 they came up with a liability of $10,000 that they couldn't pay, wouldn't that nullify the offer and compromise that they just filed?
Not necessarily.
No. I say no to that.
No.
Because as long as they filed timely and they filed. Yes.
As long as they filed, but they couldn't pay, it's A-OK.
Yeah. Yes.
Wow. So then they can go through the process again.
They would go
now,
through the process
isn't there
again.
some place where the IRS kind of comes and beats them up and say, "Look at Jack, you can't do this."
Well, what'll happen?
They would they wouldn't accept it.
What would
they?
happen is they probably wouldn't accept the offer in compromise.
Okay.
They would just reject it.
All right. So if they reject the
supposed to
offer,
learn
do you
from
have
your
an
mistakes.
appeal?
You have 30 days to make an appeal after rejection. A returned offer in compromise you cannot appeal. A rejected offer in compromise you can appeal.
Okay. What's the difference?
The difference between a rejection and a return is they just return the documents to you, and they may send you a letter and say we cannot process your offer in compromise for whatever reason. You correct the reason, and then you resubmit the offer in compromise. A rejection is an outright rejection. Maybe they've talked to you about increasing the offer. Maybe you say I can't do it, and then they say, well, your offer is not acceptable, and we reject your offer. Then you have the choice to appeal within 30 days of that rejection.
Okay, remember our little girl with the $12,000 discretionary income?
Yes.
Okay, and the $40,000. What if 6 months in, her discretionary income goes to zero because something happens with her job or something? Now she has no discretionary income, and she made the deal that she was going to pay 12 on the 40. Can you appeal the offer, or can you
If there's a
fix
change
the
of
offer?
circumstances?
You can, I would certainly contact the IRS and explain to them the situation and try to renegotiate the offer. That's what I would do.
Okay. All right.
Wow.
Well, if you have bills from the IRS or state of New York, you can give EG Tax a call. Paul is in the office Monday, Wednesday, and Friday. He is our offer and compromise specialist. You can hear from what Paul was telling you. It's a deal, and we want to help you. If you are unable to pay, this may be a godsend to you. If you need any other help getting letters from the IRS or got any tax questions, give EG Tax a call at 632-7886. Our website is egtax.com. Until next week, I'm Esther Gullias with Paul Caputo, Tiffany Fabian, and Christopher Fabian, and it was Chris's birthday. So happy birthday to Chris.
Thank you.
Until next week, bye-bye.